Hi, and welcome to Stock Trading Ninja, Part 9. This promises to be one of the most informative segments of the training as you learn how to use your experience and intuition with the patterns to discern the lowest risk, highest probability setups, ones which are unlikely to get stopped out, and give you that high win rate we're looking for. Many stock trading gurus throw the terms low risk and high probability around, but they never really tell you how to do it. Well, in this installment, you're going to learn a bunch of ways to do exactly that. You're going to get hit with a lot of information here, but don't be concerned. Over time, you'll be able to make the system your own as you discover your preferred system criteria. And in the next video, I'll be showing you the basics of how to establish and set up systems. So welcome to Advanced Tactics and Strategies. The human brain and its intuition is such a powerful tool when it comes to trading. And these tools fall under the intrinsic risk category. What you're about to learn is the result of over 10 years of empirical analysis and trial and error on my part, finding out what functions best and what doesn't. Specifically, what we're going to be looking at are the contextual characteristics of the setup. That is, what technical aspects are present that further reduce entry error. The tools we'll be using are trends, support and resistance, and price action itself. The objective being the development of proper intuition as well as the high win rate. Let's start with support and resistance. Here we'll be looking for the universal trigger to be testing or bouncing on either support or resistance. This can be in the form of longer-term technical levels or longer-term moving averages. In my experience, the long-term moving averages are the easiest, quickest, and best determinant of such support and resistance. The objective here is to locate really low-risk entries within the trend flow. Let's take it one step further and define exactly what we want to see. First, the reaction pattern should be either bouncing on the exponential moving averages specifically, or there should be a history of support or resistance which precedes the universal trigger. Let's take a look at an example. Here we see a short entry in WNR. Look at the price action pattern. It is a swing low and a 2-bar pullback. As this pattern evolves on your chart, you can see that both the red candle and the interval which precedes it are both clearly testing the 50 exponential moving average. This is low intrinsic risk. We'll get to which averages you want to be watching in just a minute. To be clear, proper testing requires that the candle body or range be on the proper side of the line, while just the wick or tail of the interval trades through the line. We'll see a lot more examples of this. Here's another entry in First Solar. Notice how the inside interval reaction bar is bouncing squarely on the 50, 100, and 200 moving averages. This pattern is bouncing on very firm long-term support. You should be seeing that variation here is relentless, which is why this is such a great intuitive tool. As far as support or resistance which precedes the universal trigger, observe this setup right here. We call this surfing, when a sequence of consecutive intervals tests the same moving average. In this case, the last 4 bars of the pattern are squarely bouncing on the 18 exponential moving average. For that matter, they are also hitting the 6 as well. This is an extremely low intrinsic risk setup. Remember, when it comes to intrinsic and contextual risk, you want to ask yourself, how likely is my maximum risk stop to be hit? If you see lots of testing or surfing, your first answer should be unlikely. That is your intuition handing you a low-risk trade. It's something that you have to get accustomed to. It doesn't happen overnight. Great traders can be made if they're not born that way. Let's consider moving average systems specifically. Because this is really the only way I trade the universal trigger, although it functions in indicators as well, moving averages are ideal, because the swing high-low pattern allows you to see that price is leading the average, with the short EMA crossing the long EMA and then immediately reacting. Here's a really great trick and one that you've been seeing in my chart examples. The key is that the reaction price action pattern should test or bounce on the longest term EMA in the system. Observe this simulated chart graphic. Notice the second pullback bar is hitting both the moving averages. Also remember the bounce rule. Notice how the body of the candle is above the lines while the tail trades through them. This is a proper test. This is really the only tool you'll need. If you consistently trade these patterns, I can guarantee you'll have outstanding profit. Let's look at some examples of this. Here we have that SSYS surf pattern again. Notice interval A hits the 18 moving average in the pattern. Given that this is the 6 and 18 exponential moving average system, this is a very, very low risk entry. Here's another example in TRIP. Notice the inside interval tests not only the 18 exponential moving average, but also the 6. If it tests both the EMAs in the system, that's even better, as you can see. So this particular example demonstrates both low setup risk, given the small size of the inside interval reaction bar, and very low intrinsic risk, as demonstrated by the testing of the EMAs in the system. Frequently, these reaction patterns will coincide with other support or resistance as well. Here we can see the short setup in FSLR using the 6 and 18 exponential moving average system, where the reaction is clearly testing the 18, which obviously is the long-term exponential moving average, and it is also simultaneously hitting the 200 exponential moving average. This characteristic further reduces intrinsic risk. More on this in just a minute. Here's one last example of the EMA testing characteristic. In this long entry in ARNA, we see the swing high pattern where the 6 crosses the 18, and the subsequent test of the 18 in the 1 bar pullback reaction pattern. This is very, very low risk. The next tool we'll be considering is the evolution of 2 or more systems in the same setup. By definition, we have 2 or more systems simultaneously evolving swing high-low entry patterns with the same price action setup. Examples of this include 2 or more exponential moving average systems simultaneously, or an exponential moving average system and an indicator, such as the MACD, or a single moving average and an indicator. Let's look at some examples of this in action. In this example, we can see a 3-6-18 system signal in combination with an MACD signal line universal trigger. Technically, we also have a single 18 exponential moving average swing low pattern here. It just depends on how you analyze it. You'll learn more about the 3-6-18 system later. It is one of my favorite universal trigger setups. And here's another example of a moving average in combination with an indicator. The point here is that multiple systems evolving concurrently reduce intrinsic risk and theoretically give the impulse more significance. Let's move on to consider the next context. We're going to see that another great way to establish low-risk positions is to use an indicator for the universal trigger, then look for reaction price patterns that bounce on long-term averages. We've seen them in some of the earlier examples, but now I want to draw attention to it specifically, because it is one of the easiest ways to establish low intrinsic risk setups. The best examples of these are MACD or directional movement index triggers with 50, 100, or 200 exponential moving average support or resistance. Some examples will definitely help. Here we see the same Boeing day trade setup where the reaction bar is also bouncing off the 50-period moving average. And here's another short example in Boeing where the reaction is testing both the 50 and 100 exponential moving averages simultaneously. These types of setups inherently reduce risk and make a stop out over the high of the red reaction bar unlikely. Now we can cover some various filter methods I've used over the years to improve performance and sort trades. One trick is to use the traditional MACD indicator itself to filter potential setup candidates. You can filter swing high-low setups by those which evolve when the MACD indicator is above or below its signal line. You can filter setups by those which evolve when the MACD indicator is above or below the zero line. You may also filter setups by those which evolve when the MACD indicator is above or below both the signal line and the zero line. And finally, you can filter setups by system. Swing high-low patterns with the signal line and zero line systems flashing concurrent triggers. Our objective here is to establish confirmed trends in the impulse and make the continuation more likely, but more importantly, be consistent with our trade samples. In this example, we see a long setup with the MACD line over the zero line according to the procedure. And here we see a short example where the MACD line is clearly trading below the zero line. These tools help confirm strength of trend and can allow you to get consistent by only taking setups which meet specific entry criteria, regardless of outcome. Another filter I want to give you is one of the most powerful tools I've ever used. I discovered this many years ago and now use it as the basis for my long-term trend analysis. It is a strength of trend indicator called the exponential moving average fan. By definition, the fan evolves when the 18, 50, 100, and 200 exponential moving averages are stacked in the proper sequence, up or down, and are equidistant and trading in the same direction. This is an indication of a very strong trend as it takes considerable time and price movement for all the averages to fan out properly in the same direction. It is a great analytical tool. In the simulated chart graphic, you can get an idea of the concept. But let's look at some real-world examples. Here we see that same BEAV long setup evolving at the same time as the strength of trend exponential moving average fan. This is such an easy, stress-free way to determine a strong trend, and it also gives you the necessary long-term averages to have on your charts for locating other low intrinsic risk entries using the other tools we've discussed. And here's a short example. Again, notice the sequence of the long-term averages. In this last example, we have one of the low-risk entries I traded in Apple Computer during its historic bull run. Notice the one-bar pullback and inside bar pattern which evolves at the green interval. But when you look at the larger contextual pattern of the exponential moving average fan, you get an idea about how strong the trend appears to be. This is how you read contextual risk. You look for the strongest trends in which to take entries with the swing high-low patterns. Theoretically and empirically, I have determined that the strength of trend is a risk reducer. That is, I am more likely to get powerful follow-through and large winners in these types of environments. Let's look at some other filters you can employ as well. We can use groups of long-term moving averages as tools to gauge trends. A great way to do this is to look at the 50, 100, and 200 exponential moving averages simultaneously to determine the long-term trend. So if the 50 is over the 100 and the 100 is over the 200, we can conclude that the long-term trend is up. Reverse this for shorts. We can also look for setups that trade or evolve over all of the EMAs that we watch, these being the 18, 50, 100, and 200 lines. Let's check out an example. Here we have a pullback inside bar pullback pattern which breaks out over point A. And that breakout is also over all the short and long-term EMAs on the chart. The next thing you want to consider is how context determines the characteristics of the impulse, which is what we are actually trading. And given that impulse is the most critical component of the trend flow objective, we want to be certain we are always moving with the trend, given our expectation and the trade management model we are using. Let me demonstrate what I mean here. Let's return to that LPX short example we analyzed earlier. This is a great low-risk setup on the short term, with 2 if not 3 systems at work simultaneously. But when we observe the long-term picture, we can see the short setup is evolving within the context of the long-term uptrend as denoted by the EMA fan moving up. This tells me that intuitively the long-term exponential moving averages will likely provide support as the price falls, which is exactly what happens. As such, this is how I use context to determine my management plan. And in this case, I used the aggressive management risk game in scalp mode to get a few quick R. Expecting this setup to evolve into a long-term downtrend without serious reactions and volatility is simply just hope and guesswork. You must learn how to play the odds of what is most likely to happen next, and you can do this with your newfound knowledge of setups, intrinsic and contextual risk analysis. Let's consider the Ninja Trend rule of thumb for setups. You want to select the long setups in the strongest uptrends with lots of support, and you want to select short setups in the strongest downtrends with lots of resistance overhead in the pattern. This is how you achieve 9 out of 10 winners and, more importantly, get consistent. On our way to the next video, where we'll learn how to customize our systems, we want to assemble the toolkit of everything that we have learned thus far. First, we have a variety of systems available for use, and numerous filters and methods for sorting entries, as we have just learned. These range from the mechanical through the intuitive, given the different types of risk. And remember, intuitive mastery is a result of empirical analysis. As you learn the strategy and begin to see and sort real-world trade samples, you'll naturally begin to integrate the principles and determine what works best for you. I can't overstate how important this is. Remember that you want to review this material thoroughly, especially the different types of systems and filters, so we can be ready for the next segment. And when you're all set, I'll see you then.